Okay, MegaWhale team, welcome back to our channel. Thanks for tuning into today's video. We're going to go ahead and dive right into the Bitcoin chart. Bitcoin has had a pretty significant move, 9% move up in the last 12 hours. And of course, this was massively fueled by the basis point announcement of 75 basis points. We're going to talk all about that, talk about what it means, why the price went up, can we still go down, and where we actually need to claim to get that bullish reversal actually in. So before we get into any of that, highly recommend, guys, head down to the pinned comment down below, join up our crypto channel, link in the description. You can find it on Telegram over here. Just make sure you're joining via the link down below. There are a lot of fake accounts pretending to be me with scam channels. This is the only one over here, okay? If you're interested in VIP, you can go ahead and contact me to join our VIP channel. We fortunately caught that Bitcoin move right at the bottom over there. We caught it around 21,100 down over here at this red line before this FOMC announcement. Made a nice profit there. Anyway, let's go ahead and dive right in. So I guess what we'll do first and foremost is talk about, why the price moved upwards and why 75 basis points was actually bullish on the market. So what we need to do to discuss that is we need to come back to, we were talking about bond yields before, we need to come back to this chart over here. So risk assets move, one of the main determinants of whether or not they're moving up or down is systematic risk, right? And we know systematic risk is a combination of stuff like inflation, stuff like interest rates, monetary policies, taxation policies, things that an average investor cannot control. These are out of our control, okay? Now, we know that when systematic risk increases, okay, when systematic risk increases, so this line over here moves downwards, this line over here goes downwards like that, we have the beta increasing, okay, and then the risk for these assets increasing. When the risk gets too high, people start taking money out, all right, taking money out because the risk tolerance isn't favorable anymore, right? That's what's been happening. So another thing's really important is it doesn't only it's not only decided on actual risk, okay? So systematic risk, we have actual systematic risk and we have perceived systematic risk. So what's actually happened this time is last quarter they increased by 7.5, okay? This quarter they increased by the same amount. So the perceived systematic risk has actually decreased, even though the actual systematic risk has increased, because here's where it gets a little tricky. If the government decides to not increase interest rates, because we know that interest rates are a method to combat rising inflation, if they decide to not increase interest rates in comparison to the previous quarter or previous increase, they are basically making a statement saying that they believe that inflation is either A, under control, B, topping out, or C, will not get worse and will continue downwards from here. So with that presumption, we have this perceived state in the market where people perceive systematic risk to have fallen and therefore prices have rapidly risen over the small time frame. Now, it doesn't necessarily actually mean anything because the actual risk has actually still increased because we've added 0.75% on our interest rates up. So although the perceived risk has decreased, and that's why we've had this rally, the actual risk has actually increased, and therefore we can expect the markets to negatively react to this. Now, here's where it gets really, really tricky. How can we have an expected decrease in price due to the increase in systematic risk and still have a bottom and bullish reversal? This is where it gets a little tricky because we've already talked about how both cryptocurrency and stocks are not connected together. They do have a 0.75 degree correlation, not a perfect correlation, meaning that they generally move in the same direction, but by different amounts. We know cryptocurrency is a higher beta, it is a higher estimated return, and therefore it's got a higher risk. So therefore it generally moves in more aggressive movements. It has bigger drops, it has bigger pumps, all right? It recovers faster, it loses value faster in comparison to stocks. But what they are both connected to, which is systematic risk, meaning that systematic risk is one of the main factors. And we have risk and systematic risk, okay? One of the main factors that drives the risk of these assets, and the risk is what drives investor confidence, investing strategies, depending on what, we're talking about, companies, how much they're willing to take out on debt to acquire these assets, these risk assets. It affects future cash flow earnings, which decreases stock values. It has a whole cascade of effects, okay? So when we're taking a look at Bitcoin over here, it's really important not to get overly bullish on this recent move. And, you're probably thinking, Whale, what are you talking about, mate? And, out of everyone on Twitter and everyone on YouTube, I've probably been the most bullish dude out there telling you guys, 18K is probably the bottom. We're going to bounce strong from 18K. We're going to have a nice rally. We've seen that. We've seen a 20% pump. We saw a 20% pump again. And now we saw a 27% pump. This 18K level, regardless of whether it holds from now again, it did its job. It did its job. It showed us a nice pump. Now, is it the bottom? That we don't have confirmation yet. We still need that weekly close, guys, above the 200. And ideally, we would need a close on the daily at least above 2380. So 23,800. Why 23,800? Well, 23,800 was that major level on the Bitcoin chart. If we go ahead and zoom back, we can see was acting in this massive buffer, was acting as this massive buffer zone before we had that explosive rally upwards. So we know this is a very major area of support resistance and an incredibly important area for us to flip if we actually want to see any sort of move upwards from here. So expecting that to break, we will see a move upwards. I'm just trying to find my brush. We will see some sort of move upwards to about $28,000. Now, it is very important, guys, that you don't get overly bullish from this news, because technically, just because we had a positive reaction in the market, it doesn't make this news positive. It technically isn't positive. If we saw a 0.5% basis point, that would have been positive, all right? Because there would have been an actual decrease in systematic risk in comparison to last quarter, but there hasn't been. There's still been an increase, okay? So we can expect the market to react poorly from here unless 23,800 is closed and above on a daily, and then we expect the price to move upwards. So let's talk about that range. You're probably thinking, why 23,800? We talked about it a lot on this channel. We were talking about it way back when we weren't even up at this level. It's because we have this massively low trading volume range, okay? And generally the price will move rapidly through these ranges depending on which direction they enter them into. So for example, we entered this low historical volume trading range from the top side down. We rapidly plummeted, okay? We can expect the inverse of that to occur if we push upwards here. And that's not the only instance. We saw it happen again over here. So this low volume trading range over here, we gapped down in the market to this next high level volume trading range. So it happens like that, all right? We have these, if you like to imagine it, we have every specific gap in a market, or every zone, and I can identify zones anywhere between basically two horizontal resistances. You have a zone, okay? This is a low resistance zone. This is a high resistance zone, okay? And we can identify those based on historical trading volume within that particular price point over a period of time. That's how we identify it. So generally, when you're in low trading volume ranges, the price will move more volatile in either direction, and mostly depending on the direction you're actually in. So if the trend is an uptrend and you're pushing through a range, you'll most likely have more of an aggressive upward trend as comparison to what you would see in a high resistance range if you were in an uptrend like we saw over here, okay? So summarizing today's video, guys, don't get overly bullish. Although we have seen some nice moves upwards, and I've definitely taken profits over here, although we had a break out of this descending channel, which is really, really good, there is still a chance we come down. Now, on the very small time frame, it looks like we're forming some sort of descending broadening wedge. Descending broadening wedges are bullish, but the angle of which this descending broadening wedge is occurring on isn't exceptionally bullish. Okay, we don't have this massive breakout target for it according to the measured move. So I will be looking to probably most likely stay out of the market right now, wait for that push upwards, and then look for longs again here. Again, if you didn't take longs at the bottom over here on this support line, and we've been talking about this support line for a long time, I had a few people ask me, Whale, why did you take longs at the bottom over here? Everything was looking really bearish. Well, it's simple, because we had support on this macro diagonal major flipping zone that we've flipped from many, many times in the past. So the risk reward ratio was there. It was logical to take longs over here. We took longs under this red line and we took nice profits up over here. So we did break out of the descending channel, not something to fade. Of course, that's really important. The measured move does take us upwards here to 23,800, but like I said in the previous video, the measured move isn't a final target and it isn't a definitive target, meaning that we're not always going to reach the measured move. Usually we take that route until we reach major resistance, and we have met major resistance right over here. Okay, I think it's time to play it safe. I wouldn't be surprised if we see a drop down, and I definitely wouldn't be surprised if we continue, but I think for the short term we are likely to be more bearish on the short term, if we're talking the next day or two, than people would probably expect post this FOMC. I feel like people have got the wrong idea about this recent move. I feel like people are probably overly bullish now, and I think it's best time to be cautious when people are overly bullish. Okay, a lot of people who are expecting the price to drop from here got caught in shorts. A lot of people have now late entered longs, expecting the price to move upwards after what they predict to be good news based on the recent price action, right? Price action doesn't always reflect the market, all right? It doesn't always mean we're in a good position. It doesn't always mean the news is good. Just because something pumps, it doesn't mean the news is good. All right, so time and time again, don't let it trick you. Be aware of what's going on. So let's go ahead and zoom out. And we're going to take a look at bonds in a second. I want to take a look at the bond yields again, because that's really, really important for predicting whether or not the bottom is in. Obviously, we can see a DXY dropping a little bit over here. Again, if the DXY drops, it just means money is flowing out of cash into assets. And it's very, very normal to see the DXY drop when we've had, risk assets increase. So that is not an abnormal thing to see. There's no discrepancies there. Everything is happening as it should, which is good to see. Taking a look at Bitcoin over here again, nothing to worry about in my opinion. I'm not going to be looking to be bearish until we lose a weekly candle underneath this trend line. And a lot of people are like, oh, wait, MegaWhale, you're wrong, you're wrong, you're wrong. You know, guys, remember, I've been bearish, actively bearish, telling you guys to sell, telling you guys the bear market is in ever since the top. I don't know who else called it on the day I called it, 14th of November. I was actively bearish. My target was $25,000 over 200-day moving average. It went right down there. Okay, from there I said my target is $18,000, the trend line. It went right down there. And then I said we're looking to enter at $18,000, expecting a pump. We saw a 27% pump. All right, nothing about what we've said so far has been incorrect. Everything has been 100% accurate. Even caught this little bump at the bottom. And I don't know what people are saying. I had some guy in the comment section saying that I've been wrong or something. I don't know what he was talking about. Look, the thing to do, guys, is to be objective, be a realist. Don't let emotion come into play. Don't think too much about it as well. There's no need to overcomplicate it. Support is support until it's not, and that is how you should act. Okay, support is support until it's not, and that is how you should act. And resistance is resistance until it's not, and that is how you should act in the short term. Okay, so play the resistances, play the supports, look for the bounces, look for the breakouts. That is all you need to do right now. Even if Bitcoin drops below here, I have secured enough profit, and everyone's following me should have secured enough profit within this range to even make money if this drops down. We can look for shorts again, okay? But just to speak the bearish argument to let the bears know that, it's still possible. A drop down is very much still likely. It is still possible. Of course, it really depends on what happens at this resistance zone. The moment we break and close a daily candle above here, the probability of us dropping below the $18,000 level massively decreases. Now, there's always probability in trading. There's always a probability we go up. There's always a probability we go down. But right now, I would say there's about a 70% chance we go up and a 30% chance we lose this trend line. If we close at daily above that 23,800, that massively shifts in favor of the uptrend than it does a downtrend, right? The downtrend here is still likely. It is still possible. Obviously, we have GDP results coming out soon. If they've said, it's a negative, we're in a recession, blah, 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 we could see some downward price action. But again, just be logical, be mindful, and be prepared. It doesn't really matter what happens to the price. And I think this is where you should get as a trader. I think the ultimate goal that you should get to as a trader is you shouldn't really care. The only reason I talk about Bitcoin every day is to teach you guys and keep you guys out of the market. But I don't really give a hell what happens to Bitcoin. I don't care what happens to Bitcoin. I've got no interest in Bitcoin. I trade it regardless of what happens. If it goes down, I'll trade it down. If it goes up, I'll trade it up. If it goes into a macro uptrend, I'll look for some longs to hold. If it goes into a macro downtrend, I'll be looking to hold some shorts. So I don't really care what happens to Bitcoin. I think everyone who's overly worried, I want Bitcoin to go to 14,000 so I can buy it. I want Bitcoin to go to 18,000 again so I can buy it. This is the mindset that's not really going to make you profitable in the long run, because it's like chasing a dead-end road. You're always going to want a better opportunity. You're always going to want a better purchase. At $64,000, if you were thinking, I want to buy Bitcoin at $30,000 and it gets to $30,000, I want to buy Bitcoin at $10,000, gets to $10,000. And I'm not saying this in a way that should compel you to be purchasing now, because I don't believe right now is the best time to buy. At this level, we've been buying much, much lower, okay? But what I am trying to say is try to get yourself out of that mindset, just so you can look at the price action a little bit more realistically and remove that emotional need to have to purchase at a certain price. Because at the end of the day, the price is not really relevant. What's relevant is the trend. What's relevant is where the price is in relation to historical key points of contention. That is what we care about. The actual dollar value is pretty much irrelevant when it comes to trading, okay? I'm gonna leave it there, guys. I hope you enjoyed the video. We're gonna catch you tomorrow with a little bit more of an in-depth analysis. Today's video was really just there to, keep you guys up to date with what's going on. Just maybe clear some misunderstandings about what's happened with the price action and keep you guys in the loop. Now, of course, if Bitcoin does break upwards here, there is a chance we can push higher. And like I said, 23,000 is our target. And I don't think anyone should be overly bullish right now. And I definitely don't think anyone should be overly bearish right now. We're at a major resistance support zone, a point that could ultimately flip the trend that we're in, this downtrend for the last few months. And I don't think being overly bearish at that point is wise. You might blind yourself. And I don't think being overly bullish is wise until we break the resistance, because then you might enter at the top and then get dumped on. So with that being said, guys, I'm going to drop the links below. Head over. If you want to learn how to trade like me, contact me via Become a Trader. Of course, if you want to trade where I trade on Bitget, you can go ahead and do that too. And I'll catch you in tomorrow's video. Thanks, team. Okay, guys, we're going to be taking a quick look at Bitget. And now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more. KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way.
If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.